Hello, good morning and welcome to today's morning report on Monday the 20th of October with me, Richard Perry, market analyst at Handtech Markets. These European markets have started fairly mixed. Sentiment is pretty much not really certain as to exactly which way it's going to go yet. These equity markets are slightly lower, and that follows on from that significant rally that we had on Friday. But there's a bit of an unwinding of that rally that's going on. DAX down 1%, FTSE down 0.5%. But across the FX markets, there's a little bit of a consolidation, nothing really moving in any considerable direction. But certainly, if you look on Friday, we had volatility come down sharply on the VIX index, and that certainly was following on from that significant rebound that we had on Wall Street. Asian markets also strong on early morning today, but certainly I think these European markets are a little bit just unwinding some of that incredible move that we saw. Just a few signs that there were some anywhere near term lows, but I think it's going to be a choppy week. I don't think it's going to be. Don't think market's going to be especially settled. There's a lot of key data out. Not necessarily today. Today's economic calendar is actually pretty thin. There's not a great deal going on at all, apart from a couple of Fed speakers. But certainly the markets will be looking forward to this Chinese GDP data that comes out early hours tomorrow morning, and I think positioning for that will be key. In terms of how the dollar is performing, as I said, just very volatile over the past few days, unsure of the direction it's really moving in. So it's still sort of consolidating, you'd say, but in a volatile manner. So that's going to continue to feed these markets in terms of volatility. My chart of the day, going to look at Euro Sterling today. Basically, I did speak about Euro Sterling last week, saying that we had a rebound on the move above 79 figure, and that opened that 80. Well, first of all, the move towards 80 big figure, and then obviously that key resistance that was coming in around 80.65. But the move was strong to the upside, but it seems to have now lost its way, lost its momentum. And that is interesting because it comes around that key resistance point at 80.65 anyway. But also looking at these momentum indicators, they have rolled over. Certainly the stochastics have rolled over, given a cross sell signal and a confirmation of that move with the lines back below 80. MACD also up to a level at which the rallies tend to sort of roll over and run out of steam on the upside. And if you go back a little bit further, you can see that this ultimately is probably just another chance to sell within this big bear phase that we've got. Nice rally into a resistance band. The black line is the 144-day moving average, which is pretty decent as a long-term gauge for the big rallies. And that capped the gains on Friday, the back end of last week. So what we've seen is subsequently since then just a drop off. The intraday hourly chart shows that we're coming back towards a test of that key support around 80 big figure, which seems to be the level where the buy was the breakout level, certainly on the upside. 79 big figure was the breakout on the upside, and that is now the level of support in terms of the initial test we're going to get. There's another support at 78.50 as well, and I just think that at the moment it's just unwound this move. Now the key thing will come, the key factor will be when we see a test of that 79 figure level. If that now starts to break down, you'd suggest that would start to sort of get the impression that this recovery phase that we're in is starting to run out of steam, because certainly that is the first key support within that recovery phase. Not been tested yet. It's actually holding on early on today. There's been a bit of consolidation in these FX markets today, but certainly if there's a bit of direction, it'll be interesting to see if that 79 figure mark is tested. These intraday hourly chart momentum indicators are not all that positive anymore. They had been decent on the way up, but there's now sort of the RSI is tending to sort of camp towards the bottom half between 50 and 30. MACD lines below neutral as well. Stochastics also just beginning to improve slightly, but I think on the basic on a basic level, the momentum on the hourly chart is just a little bit more negative than it has been over the past few weeks anyway. So that's the outlook for euro sterling. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.